Welcome to FreightWaves Now, Wednesday edition style. Welcome to the tip of the cyclical cycle. I'm Chad Prevost.
And I'm Emily Zink. And Chad, I absolutely love going to the malls. Don't like online shopping all that much, but unfortunately, we know the malls are dying.
Well, I have good news for you. Amazon is repurposing malls.
Oh, I'd love to see what they're doing.
Good afternoon. This is Seth Holm with your Wednesday Finance Update. Today I'm going to be talking about two things. First, inverted yield curve. You may have heard this tossed around a lot in the media. Today I'm going to talk about what it is and why it matters. So here on my sonar chart, this is an inverted yield curve. An inverted yield curve is when short-term interest rates are above long-term interest rates. So here in the orange line, you have the 3-month Treasury bill. That's at 2.12%. The 10-year Treasury bond is in white. That's at 2%. So now with short-term interest rates above long-term interest rates, why do we care? The answer is it's the very best recession indicator that we have. So over the last 100 years, 10 out of 11 times this has happened, this has led to a recession. There's only been one false reading, and that's been in 1966, and the market went down by 25% that year. Now, one last crucial thing with the inverted yield curve. What really matters to give you a true signal is it's got to persist for 4 weeks. So as you can see, it first inverted back in March and April. But it only lasted for a week or two. And the reason why I'm talking about today is it's now been inverted for 5 weeks. So now we have a true signal in place. But it is not all bad news, because after the curve inverts, generally it takes about 7 to 24 months for a recession to start and the market to peak. The second topic I want to talk about today. The Wall Street Journal just put out a report about Amazon repurposing some of the bankrupt and vacant malls that had helped put out of business into fulfillment centers. And there's really 4 reasons why they're doing this. 1, cheap real estate. These malls are huge. Amazon needs a lot of square footage for their fulfillment centers, anywhere from 650,000 to 1 million square feet. Second, these malls are located near dense population centers. So in big cities, there's not a lot of warehouse space. So Amazon is getting close to those population centers. Third, proximity to the highway. And these trucks can pull in and out, and they can get these packages over fast. Lastly, the infrastructure is already in place. Water, gas, and sewage lines are already there, and now so Amazon wants to get those packages to people in one day. This is one of the many ways they're going to do it.
I'm Anthony Smith, market expert and economist here at FreightWaves. And today we're talking about single-family new home sales. Single-family new home sales disappointed in the May numbers, as we can see here in the green line. In the green line, we have month-to-month movement, and in the red line, as I mentioned in the previous video last week, it's important to look at the overall trend. And the overall trend, the 6-month moving average here in this red line, shows that there's been a stalling out in the overall trend. Now, this is something of note because this is coupled with consumer confidence dropping. Consumer confidence has dropped to the lowest number since September 2017, and this is something concerning because, as I mentioned earlier, it doesn't matter what the conditions are for the consumer. If they aren't feeling confident, they aren't going to be making these purchases. Now, this is something of note because when we're looking at single-family new home sales, this is something that has downstream effects for freight and consumers making purchases when they're filling up those homes with goods. This is also something that's going to be interesting to see how these builders are going to be conflicted with existing home sales, which rose in the latest month of data. Existing home sales makes up a much larger portion of the transactions, but it's going to be competing with these new home sales, and the existing home sales are priced much lower and much more appealing to consumers that are looking for entry-level homes and homes at a lower end of the price point. Overall, it's going to be very telling for what the rest of 2019 is going to shape up to be, as consumers are feeling rocky and not quite stable and being able to make these decisions as we have the latest month of data. It's going to be interesting to see if these consumers rebound as we move forward throughout the rest of the quarter and the second half of 2019.
As always, we had a lot going on, and if you want to continue to see great content, of course, you're watching on YouTube. Follow us on Facebook, Twitter, and Instagram.
Tune in each and every business day, 4 p.m. Eastern Time. And in the meantime, don't worry, be happy.